This lady is really, really, really suffering, and she's trying to stop the bleeding. I mean, I don't know if she can. I mean, I would point out that she had been kind of close to this territory. I mean, it wasn't quite this, but she was not doing so well ahead of the debate, and she did manage to salvage herself. So, anything could happen. They talk about an October surprise. We're in mid-October, so I'm waiting. I'm not sure what that one is. But I do think that it comes back to, it's the economy stupid. ABC News admitted this much on Sunday.
Some 59% of Americans say they believe the economy is getting worse, compared to just 23% who say it's getting better, with more Americans trusting Trump to handle the economy if he wins a second term.
Yeah. Okay. So again, I'm here with Rob Hordon, and I want to bring him in to get his reaction to that. What do you think? It is the economy?
Yeah, it's the economy. It's always the economy, or it's usually, 90% economy with every election. And look, inflation, 20% or so inflation over a 4-year period, that really hurts the working and middle class very hard. And, it's not something like unemployment, if you could have a recession and then you lose your job, but then you get another job, it kind of gets repaired. But that degradation of your purchasing power, 20%, that's
pretty
permanent.
Painful. I mean, Donald Trump revised the graphic. I should put it up here and we can see. He revised the graphic the other day after CPI came out, and he put this out, and I'm looking at it. I'm like, here you go. This is the whole story. Ladies and gentlemen, when you have car insurance upwards of an increase of 57%, you get kids at school that see their increase in cost for food. I don't know. They were paying more for cafeteria workers. I don't know I guess it's also the cost of food, right? And getting the food from point A to point B. The cost of K through 12 food is up 70%. I'm like, this is not that hard. I think Americans are super forgiving. I mean, they elected Joe Biden, for goodness sakes, right? And he was not necessarily any spring chicken way back when. He's obviously deteriorated, but they'd be willing to forgive her the uppity personality, the lack of credentials. Would be forgiving a lot if, in fact, the economy was doing great. But the economy's not doing great. Stock market's doing great, but there's a big sort of divide, if you would. And that's why I keep saying to everybody, you know what? Invest. Let us help you with the 76 research report. You've got to invest, because if you don't, your dollars are just going to keep crumbling away. They're going to keep printing money. And guess what? Somebody's going to do well. Somebody's going to do really well. And it's not going to be you. It's not going to be the middle class.
And I would say, when you think about the performance of the stock market, the inflation contributed to that, because, they printed all this money basically, and it flowed through the economy, and then it kind of flowed through in terms of, helping corporate profits and helping money flow into the stock market. But on the other hand, though, the stock market's driven by things that are unrelated to policy, and we're in the middle of an amazing technological boom or revolution. And so much of the market is to that. So stocks are doing well because, we've got some underlying things in the global economy or the American economy that are very favorable and very exciting. So it's the combination of the two.
Yeah, it is. And I think that you've got a Fed that's going to continue printing for the foreseeable future. You've got all this happening all around the world, right? Like, we're not living in a vacuum. You get the ECB out there doing the same thing. And we haven't even dealt with the inflation that we have. So ultimately, where is this heading? I think actually whoever wins, and I think Donald Trump would at least try to rein in some of the spending, but I think whoever wins, we're going to be looking at more of the same, 35 trillion and counting, which may contribute to also what we're seeing in terms of gold prices right now. Rob, I want to show you a chart. Gold actually today, this isn't a chart. This is actually just a headline actually out of Reuters. So this is Reuters pointing out that the 10-year note yields had slipped to a week low, and this is causing people to go more increasingly into gold. We saw gold trading today somewhere around, I want to say somewhere around $2,700 an ounce spot gold. And the expectation amongst those polled in the industry is that it's going to go to 29.41 sometime over the next 12 months. You and I are both pretty hot on gold. We both like it. I know that you actually even recently bought some more. I should disclose that I as well. I just think it's one of those ways that I hedge inflation. And I know we talk about it in the basic income builder at 76 Research. And if you're interested in getting that portfolio, I encourage you to do so. But, you know, if you're living in an environment where you've got central banks around the world continuing to print, gold's part of the answer, I would think, to trying to preserve some of your purchasing power.
Yeah, I mean, gold and Bitcoin are kind of part of the same story where people are looking for hard money kind of solutions, these supply constrained stores of value. And I think it's a global phenomenon. You know, we've talked a lot about what's going on internationally and with the various central banks around the world. They've increasingly lost interest in US dollar assets, whether it's, you know, like treasuries, right? Because not just because of our budget problems and our sort of long-term debt issues, which do not appear to be getting resolved, or there doesn't really appear to be tremendous urgency to get those resolved by either candidate. Frankly, there's not tremendous attention to that, but also kind of in the wake of the whole, you know, crackdown and sort of economic policies of post-Ukraine and the vulnerability that sanctions or asset seizures, you know, represent. So gold is a very, you know, there are a lot of reasons why individuals and governments around the world are going to be incremental buyers of gold, and that's driving demand. You know, I think more recently, the strength of gold, like very lately, you could kind of attribute it to a little bit of a mismatch, because right now we're in a scenario where, you know, Trump is potentially this kind of going to bring in, if he wins, he's going to bring in a kind of a growthier scenario in a more robust economic scenario. But this is kind of on the heels of the Fed now flipping to kind of rate cut mode.
Mm-hmm.
And you kind of see that with the 10-year treasury going up towards 4% from a low of around 3.5%. So, you know, it's like a little bit more of like an inflationary dynamic now that Trump does appear to be ahead. And I think that's helping.
You know, let me, you know, and again, it's not an either or scenario, but it's just interesting to look at this because this is a chart that has both gold and Bitcoin in the maroon red color, gold in green. And you can see one is far more volatile than the other. So it's not acting entirely like a store of value just yet, which I think is where the Michael Saylors of the world would really like to and believe it is heading. But gold really kind of is, right? If you look at gold, and by the way, we've looked at gold together vis-a-vis the amount of money in the money supply right now. And one of the things I find so fascinating is that it's really tracking in a way that it didn't, say, back in the year, I don't know, 2000, was it 2007, 2008, when you started to see it get kind of out of whack? Now it's actually, it seems to be
really ran up in dollar terms. Yeah. Going through 2011 after the financial crisis, people really got very aggressive about gold, and it led to a correction. But even over that long, you know, kind of that longer time frame, you've had this sort of, you know, you smooth it out in that little kind of mini bubble. You have, you know, like nice, very, very strong returns for gold investors over the last 20 years, almost at the level of, you know, the S&P 500.
Wow.
So it's been an impressive run. And yeah, I think, look, like in terms of comparing it to Bitcoin, it's you know, Bitcoin's a much more volatile and uncertain asset class, an emerging asset class. I don't think you have anywhere near the kind of potential upside in gold as you do in Bitcoin. No one's going around like Michael Saylor.
You don't have the maybe potential downside, but go ahead. Yeah, no one's going around like Michael Saylor, except for, I don't know, maybe Ron Paul.
Well, it's almost like for gold to go up to, you know, because gold is so much of a larger asset class than Bitcoin. Like it can't grow to the levels that, right, like at that pace, it would be like gold would just take over the whole, you know, kind of all the financial assets in the world, and that's sort of inconceivable. But I don't think that's necessary to justify an investment in gold. When you think about gold, you want to have that kind of participation in you know, kind of protect yourself from money creation and have that participation in general wealth creation. and also have an asset that tends to perform well in scenarios where stocks do not perform well. So in kind of more kind of geopolitical crisis, financial crisis kind of scenarios.
I was just putting our model portfolio performance up. Congrats us, 3 months ending at the end of November. And it's been quite a run. You can see the top consumer pick up 25%, top financial picks up 24%, real estate up 23%. Really a wonderful success story. And I encourage people to get all three of the model portfolios. Actually, you can get what's called Founders Club there at 76research.com.